You're about to listen to a conversation between me and my good friend Ian Rountree. Ian is the founder and managing partner of Cantos Ventures. I think one of the best minds and best people making hard tech investments. He and I go back and forth all the time on how important business models, math, finance actually is to the sector. And we got in a bit of a Twitter back and forth with some folks. And so I pushed him and said, let's turn the cameras on and share with everybody else what we talk about on our own. So give a listen and let us know what you think.
All right, Ian. Like most of these great conversations start on Twitter. We can't hash it out or go in enough depth. So here we are on video, and then I don't know. Maybe one of us will have to write something so we can fully get the ideas out.
Yeah.
Why don't you give like 10 seconds on Cantos and take a victory lap on spending time where everybody else is now and how long you've been doing it, and then we can dive in and throw some darts.
Yeah, so I mean, I started Cantos almost 9 years ago, which is crazy, and, like, I'd come from healthcare consulting and fintech. I was early at SoFi. I was interested in, like, technology and big important industries. That led me ultimately to people who were also building things in the real world. People started calling that deep tech. I was like, "Okay, whatever. I guess I'll embrace that." Basically went all in on deep tech in, like, 2018 with our second fund and have been mostly leading pre-seed and co-leading seed rounds in hard tech, deep tech, near frontier, whatever the heck, since our third fund got off the ground in 2021.
Wait, what's your both surface level and then root analysis of the rest of the money guns pointing themselves at your world for now?
When I first started investing in like technology and big important industries, the first embodiment was vertical SaaS. And it was like, I remember there were like some of us back then, it was like Tim Young at ENIAC and like Mark Goldberg at Index, and then like Catherine Boyle, and she was a General Catalyst. And it was like, we were the weirdos who were like, the construction industry might need software. It's like that was not consensus back then. And then that just ultimately morphed into like, oh, well, you got this new like AI driven system of record for your building. Like, it turns out like some of the subcontractors like they don't like doing this task. Like, oh, a robot could probably do that. And you plug it into your SaaS and like, cool, now you got an even more defensible business. And like, sure, hard tech, whatever. But like, it's sort of funny that like I don't think of it as deep tech. I just think of it as like trying to solve the biggest problems in the world. A lot of those problems are in physical industries. That means software is embodied in things other than screens. But like, branding around hard tech, deep tech, having done it longer than most folks, like has accrued some brand value or perceived expertise. And people come to us when they're starting companies.
Why do the big funds care now? What plot twist did they all get right that made them want to crowd into what you've been doing from a pretty principled place for a long time?
Well, I think there's a few things. It's like this stuff is really freaking cool. Like, you're watching like SpaceX catch skyscraper sized rockets on their like robotic arms, and like you're sitting in your like, SaaS SDR job, and you're like, well, I want to go do that.
Do you think that is it an Elon Palmer? Is it an NF2, which is like, but these guys did things in hard industries. We all didn't do the math or the logic on like why that can work as an investor. They are working. Fuck it, let's go. Do you think there's more nuance to the intensity of interest?
No, I think the more nuanced view is like they are acknowledging that software has been so saturated that as their AUM grows, they have to find other ponds to fish in. There's a lot of really big industries in the world that could leverage software and aren't, or technology writ large, sort of starting with software. And it makes sense that like, let's go invest in these other trillion-dollar industries that don't already have 100 competitors in them that are technology centric. And yeah, it's easy to point to, Founders Fund, as far as I know, has been one of the best performing venture firms out there, certainly of the larger firms. And like their biggest hit is SpaceX, and Anduril's up there now. And yeah, they're in Stripe and Ramp and some other things, but like, we pitch LPs, and sometimes they're like, well, there's a few of these firms that like are bigger and have focused on deep tech, and like we're not like totally impressed with or certain of their ultimate returns yet. So like, can you make money in deep tech? And I'm like, yeah, but you didn't mention the best deep tech firm out there, Founders Fund.
Yeah.
And like their top two returns are deep tech companies.
So what do you think people get right these days about financing and wrong when it comes to financing, solving tech in important places?
Well, as I think the firms are right to push into other industries
Yeah.
that are more physical in nature, but the question is what maps and doesn't map from software land. When I talk to my deep tech peers who get questions, pushback from LPs, and they're trying to justify why investing in deep tech matters, a lot of times they'll be like, well, go back to the origins of venture capital and like, Digital Equipment Corporation and like some of these businesses that the OG VCs were backing. And they were largely hardware centric and like they made great returns. And I'm like, yes, but the difference is they were buying 50% of the company at the seed round. And like we can't ignore that difference. So coming in and buying 10% of the business at, 40 post at idea stage, I don't know if that works.
I guess what's interesting to me is there's like two flavors of what we're talking about, which is like, hey, pretty logical technological developments applied to industries that just people hadn't gone about it the right way, and standing up competitors, right, as opposed to selling is one version of our plot line there. But it's distinctly different than the skill set of holy shit, you're doing something extremely novel. You know what I mean? From a technical, it's like the lumber manufacturer is different than novel biofarm. I also feel like you're having teams being stood up going like, we do deep tech. It's like, okay, but those are two different, wildly different skill sets, both from a pattern matching, capitalization, valuation standpoint. I'm curious how you square that.
Yeah, but biotech's actually an interesting example because it is a subset of capital markets where investors have largely figured out how to underwrite based on technical rather than financial milestones
Yeah, totally.
and
Well,
technical slash regulatory.
I've got a position that like energy tech in general, but especially climate change suffers from a lack of structure that biotech has, that the establishment of like phase one milestones having value is actually one of the biggest innovations in the last 100 years because it's financed all kinds of shit that has saved billions of lives. The establishment of platforms in biotech and pharma, right, that could buy a preclinical or a phase one asset, give it commercial value, how you would stand that up in other net new industries where we should be seeing faster innovation cycles and more capital flows. But right, you have such a long timeline to traditional commercial value that you're either like Elon and you could bend the markets or you're fucked.
The biotech is an interesting example, but in many ways an inconvenient one because we'll have a portfolio company that's enduring whatever FAA, NRC, EPA approval, and you'll go to investors for the next round, and you'll say like, hey, here's all the stuff we've done, we've submitted this to the agency, and this is sort of like where we stack up against other companies that are going through this process, and they're like, isn't this risk binary? Like you either get approval or you don't. And you're like, well, yes, ultimately, in the sense that like a drug ultimately either gets approved or it doesn't. But in biotech, there's sort of an understanding of like based on the indication and where you are in preclinical and then clinical trials, roughly what that asset is worth or might be probabilistically to the point.
That's my point. Is that you like the M
But
and
that
A
doesn't
engine?
exist.
Well, this is my point. Is like
Yeah.
I've talked to a lot of energy, call it energy security. I got told at dinner last night that the repositioning of climate tech it needs to be energy security, and I'm all in on it.
Yeah, totally agree.
That what you need are some platform. I've been trying to think through what are the platforms you could stand up where you have operating leverage. You know what I mean? Like where you're up and running, and so something that may take 8 more years. You know what I mean? Can sit on your. I mean, because that's at the end of the day what unlocked the capital markets is some platform company was like, yeah, we'll take the risk on. Like, you know what I mean? It doesn't cost us that much more to run a trial than it did yesterday, and we can sink. And so, and that bid alone unlocked the whole world. And I've been wondering if the actual move is to be the first holding company that buys a bunch of stuff that's like in between commercial milestones, we're making real progress, then have a platform holding company for all that stuff.
Yeah, actually, there is another industry that's shockingly similar, which is mining.
Yeah, I had thought about that.
Very, very similar. Our largest investment, as I think is in Earth AI.
That's the one. That's the one that I'm gonna very disappointed I couldn't
I should
figure out.
have introduced you to it sooner, but yeah, I've been like shocked. It's very, very similar. Like you've sort of got these big, the majors, the equivalent of big pharma, who are like these giant capital and distribution engines who are in the catbird seat and don't want to really take any risk, and they're fine waiting until the like startups, the speculative biotech startups or the junior explorers have taken all the risk and like can filter through, and finally they show you an asset that's like proven through human clinical trials, or you've drilled 50 holes to categorize the deposit, and then they're happy to step in and like buy the thing for billions of dollars. But like they don't they don't want to take the risk on it, really.
One of the mind wait, well, so this is interesting now because there's a second one. So it's like the compounding advantage to a mining company where they're like, great, Earth, Earth AI has like early signs of a sample. Are they just good capital allocators? Like, what have
Yeah,
they done that
basically.
we could borrow fund for other industries, especially energy, that need to see more innovation?
They have a low cost of capital for these pretty expensive projects. It's equivalent to bringing a drug to market,
So
hundreds of
capital
millions of
advantage.
dollars. They have a capital advantage, and they have a distribution advantage. They have all the relationships with the people that actually buy the material, just like pharma companies have the relationships with the payers and the providers. And that's not
Yep.
something a startup could recapitulate in a short time frame.
Interesting. I actually even think this applies to space too. Sorry, we've gone fully off topic. So much cool stuff to be built in space, but it's so long dated to any objective commercial milestone. There's like so many wickets to run through that you either need. It takes a pretty irrational capitalist to allocate throughout that entire cycle. And it works, and there's people who know how to do it. But like, I wonder in space if you could get enough. You could get enough of a government affairs bureau, enough of a procurement side, right? That you could take on the version of phase one. It's like, oh, the tech works. You know what I mean? But now we need like triple nines reliability on launch and XYZ. It's like, great, we can take that, we can subsidize it, and like once it works at all, we will have contracts to immediately flow through it. I wonder if you could do something in space.
Yeah, but I mean, our reaction to this has been we don't like doing the stereotypical deep tech thing where you're taking years of technical diligence and there's sort of this unproven sequence of milestones that unlock capital at each stage, and you just sort of like bet on someone that's an incredible salesperson and hope that the
Totally. I mean,
trends
that's like
go in your favor. I don't like that anymore. We've made money doing that, but I think a lot of that was, Zerp helped us out.
totally. I've been looking at the counterfactual of like, do you set up the platform company with the compounding advantages on capital and distribution, right? And because I do think it actually, back to my where we started this, and then we can go back to the topics we originally thought we'd talk about. But it's one of these things where like people laugh at the capital, or at least innovators. Like I actually this week think good innovators have a ton of respect for the capital markets and learn how to use them really well. But like as a whole, technologists laugh at the capital markets. But that financial innovation saved billions of lives. You know what I mean?
Totally.
100xing the amount of innovation capital in the life sciences sector, like, is only possible if you create non-commercial economic milestones. I guess I worry. My assumption would be like, I worry that if you don't have that in other sectors, progress is held back dramatically.
Yeah, totally. I mean, I was riding around with, someone who was visiting in a Waymo, and I was like, this is a really good example because, like, I remember when VCs, even deep tech VCs, myself included, had kind of given up on autonomous vehicles. Like, they'd been around long enough, and the long tail was difficult, and regulation was difficult, and
Totally.
they were Cruise sold to GM, and then GM, found a way to kind of get Honda and
But you
SoftBank
had
to
you had
split
to have
it.
someone with AdWords. You had to have someone with AdWords to subsidize it.
Exactly. But if it were left up to VCs,
Or
we
capital
wouldn't
markets in
have
general.
we wouldn't have Waymos today.
Totally. And I think the interesting question no one wrestles with is like how many other breakthrough innovations that have long J curves can we solve for if we hack the capital markets a little bit?
Yeah, if my max check is like, with follow on $4 or $5 million, like I
Well, but the
can't move the
point is like
needle.
there's rationally not more money flowing to it because like no one wants their money locked up for experiments for 10 years. You know what I mean?
Yeah.
But it's like, oh,
Yeah.
if we run this experiment and we're right, I get a little bit of money and we can either decide to keep playing or take my little bit of money.
I mean, the examples in hard tech right now that are still drawing a lot of money are, you know, AI adjacent. It's like fusion energy and humanoid robotics slash like robotics foundation models. And the argument for, we just looked at a humanoid robotics company a couple of weeks ago, really liked the founder, just getting off the ground, have like a cool demo they built on their credit card, and they're like raising 12 million bucks. And we are like, look, man, like the implied valuation there, unless you get diluted to hell, is like kind of out of our range. Like, wish you luck, happy to make some intros. And they were like, yes, but like the reason it makes sense is that the upside for humanoid robotics is essentially unlimited. And so, you should be willing to pay 3 times your normal entry price because of the upside. And I don't know. I don't buy that.
Before we lose it, because we hit on it again with project finance, I mean, like, what do you think the playbook is for financing hard things? But do you have a talk track for founders?
Yeah, I mean, I often remind them that, look, you and I are doing this because we want to solve the biggest problems in the world. We know that, to do that, it's going to require some outside capital. But let's not forget what the whole point of this is, which is to build as big a business as possible, as quickly as possible, with as little capital as possible. Like, you and I make a lot more money if you can do this more capital efficient on balance. And like, I always tell them, like, I'm 37, some of my friends my age that have made the most money, they started companies and didn't raise venture capital and then sold them for like 30 to 50 million dollars. And like, because they didn't raise any outside money, they owned most of the business. And they've made more money, even accounting for paper value, than some of my friends and portfolio founders who are co-founders of unicorns. And so, not that all the founders are like 100% financially driven, but like, always giving them anecdotes like that. And, I think the smart ones know, but they're like, yeah, yeah, but like, this is going to take whatever, like 20, 30, 50, $100 million to like really achieve what we think we can do. We know that venture capital is basically for R&D, but once we prove that it works, we shouldn't keep selling big chunks of our company to grow from like 2 to N. We should figure out how to take on, equipment financing or project financing or, government
Are
grants
you
or
having to have that
whatever.
talk track, or founders coming in with that knowledge of the capital stack?
I've been impressed at the percentage of founders who are now aware of project finance. There are very few who have actually unlocked it, but they know it's a thing.
I kind of have a thesis as I'm on this bent of like, you may not care about winning, but the score is kept in dollars for this game. And I wonder if when you have founders getting into physical assets where like there are known margins, you're wading into a known business model just with more operating leverage than anyone. They actually do a lot of the math up front, and they have a higher predisposition to be like a true capitalist. You know what I mean? Of like, okay, here's the margin I create, here's how I capture it, and here's how I finance it. Than a lot of folks on the software and product side. And it's like coming at an interesting time when you like, I think you need to even be, if you're building a software business, you need to be more aware of that than ever. Either because now there aren't IP moats the same way there used to be on software, or you're building an AI, which obviously has a lot of capital needs. And it's been interesting to see the more I wade into your world that I think it is a more intelligent founder on the capital side of being a founder than the other side.
Well, I think that some of that is just like the founders that come to you or introduced to you. There's some selection bias. The overlap between like our hard tech focus and your financial focus is like my favorite Venn diagram. I often tell people you're like one of one or two VCs I've ever heard use the term operating leverage. There are a lot of founders that we talk to that take, and they're more in the like classic deep tech camp. And it's hard for me to not put that in air quotes now because, it connotes like extreme capex, long duration, high technical, if not outright scientific risk. And like, that's just not my preference anymore. And on balance, I'm painting broad strokes. This isn't, of course, true in every case, but like, there's sort of your stereotypical like PhD deep tech founder who's like commercializing their research. And then there's like the engineer founder. And we find that, the scientist archetype tends to be more solution focused and they're like looking for the right problem to solve, especially if they're commercializing their own PhD work. And then the engineer is like obsessed with the problem and doesn't really care how they solve it. They just want to solve it. And the engineer also who gets interested in business building starts to think of their own business as an engineering problem to be optimized.
Yeah.
And that's definitely the type of founder that we jive with a little more. Cause like, we're aside from me on my team who has a biomedical engineering degree, we're not really technical. We're more finance people that just like solving problems in the real world. And so it's a little bit dispositional. But I don't really want to back a bunch more PhDs who are got a hammer and they're looking for nails.
Yeah, I mean, I got to try another slogan on for size, but I've been saying that you need founders that can do three things. They're been three different markets. One is for customers and competitors. The other is the market for human capital, and the final is financial capital. And I really think you need all three, but especially in some of these harder, more physical sectors, you have to have a real appreciation for how they operate and how you can bend them in your favor. And then the upside becomes massive. Again, I think easy to use, Faith and Andrew, but I think they've been great case studies in like not only being innovative and doing a bunch of things right, I think they went into it with a very healthy respect for / thesis on how they bend all three of those markets towards them over the arc of history versus like cool product innovation go, which I think is necessary but insufficient.
That's right. There was a stair step even for like SpaceX's goal of colonizing Mars. They didn't try and go straight there. There was a stair step of things they do along the way to make money to
And maybe
as
we'll
a
end here
CI.
because we can tie it back to Sam lesson. But Sam recently said that like Altman sells AGI to finance like enterprise AI search, and Elon sells Mars so he could finance rocket. It doesn't mean they're not related, but that like it's clearly a chess move strategy to bend some markets your way.
Yeah, I think we're all trying to figure this out. We know it's important, and there are definitely going to be hardware businesses that are leaner than others. And some of them can probably get that done just with venture dollars. Like we have a portfolio company that's done pre-seed round, and they've, closed contracts with the military that almost double the total amount of capital they've raised. And this founder is like maniacal about wanting to raise, the big seed, small Series A, and then like never talk to another VC again. And like
While we're on that, can he go finance those purchase orders? Is there a home?
probably
Let's
at
say he's
first,
got 10 million of purchase orders. Is there someone out there that does that?
yeah, once there's enough duration in the business, you'd find someone who'd like finance the inventory costs or something.
I hadn't thought about like as you have more people dealing in size in DoD and manufacturing land against an early stage profile.
Yeah, they're underwriting the federal government, which hopefully
Hopefully it's
keeps
fine.
being a
Yeah,
AAA
you should
credit
be
rating.
fine. Yeah. All right, bud. This is fun.
Yeah, definitely. I think we'll have some more proof points to point to soon.
Thanks for making it through all of that. As always, smash the subscribe button. I think that's what everybody says. And more importantly, let us know if you don't agree. We always love being disagreed with. You can follow me on Twitter at WQuist, QUIST, or follow Slow. They retweet most of everything all of us say anyway. So at SLOW. And we'll see you next time.